With the survey data on Friday, I have a 3-month moving average of non-farm payrolls of 286,000. That's job formation. Is JPMorgan saying that will break, that will slip down to some appallingly 3-month moving average of, say, 160,000?
Well, we have a forecast for 300,000 job gains on Friday, so clearly that's a pretty strong number, even if it's a moderation. I think to get the Fed to pause, you need job growth to slow to at least 100,000 a month over the next 2 or 3 months. That, I think, is a hard one to get confident in. That is what's based on our forecast, that the Fed by the first quarter sees that and is ready to pause. And I think that's the key issue here, both in terms of getting the Fed to pause and also the concern that if they don't see that and they keep moving, that they go further than they actually need to.
Bruce, we got to expand on that. That's a stunning number. I have a run rate back decades of 150,000, and maybe you come up to 200,000 per month for non-farm payrolls is a healthy, a normal America. You're saying we've got to get down to 100,000, 100,000, then another 100,000 to make this Fed blink?
Well, yeah, I think if you want to have an economy in which the unemployment rate is moving in a controlled way to roughly 4.5% unemployment rate, which is what I think the Fed is telling us, you need job growth to be soft. 100,000 may not even do it, but I'd say 100,000 is probably the kind of number the Fed needs to see to be comfortable to be thinking about pausing.
Bruce, this goes to something that you flicked at earlier. Do you think that it's inappropriate for the Federal Reserve to be targeting the unemployment rate at a time when the jobs market has dramatically changed post-pandemic?
I think it's appropriate for the Fed to be targeting a softening in the labor market. I think it's appropriate for the Fed to be paying attention to what's happening in the inflation process, wages, salience, inflation expectations. But I think it's also appropriate for the Fed to be forward-looking, which is to recognize that there's lags in the process, that they're getting a restrictive policy in place. And the difficult call is, do you stop on the tightening before you've gotten everything you want to see in the data? That's really the tough call that they're going to have to make here at some point. I think somewhere in the range of 4.5% seems perfectly reasonable to be pausing, but they may not have the labor market outcomes at that time that makes them comfortable to do so.